If you're looking at all of these crazy market crashes right now and wondering whether or not it is actually as good of a buying opportunity as some people are saying it is, here is a formula that I came up with to help you answer that question for yourself, because of course there is no one-size-fits-all blanket policy for investing. I'm going to take all of this and turn it into a digital workbook that you can download, but here's all of it for free. So you can just jot this down and we'll go through all the steps right now. Okay, so starting off at the top, risk profile compatibility. This just means, does the asset fit into your personal risk profile? And if you don't know whether or not it does, you need to define your own risk profile. How much risk are you willing to take with how much money? There's no right or wrong answer, but if you're looking at investing in things that are hyper volatile, like cryptocurrency, for example, you need to be comfortable with losing money that you put into these things because they are much higher risk. Moving on, we've got time horizon fit. Does this asset fit into the way you like to invest? Now, me personally, I'm more of a long-term investor than I am a day trader, so I don't really pay much attention to the super crazy, hyper volatile stuff that's going to be gone tomorrow, most likely. I'm interested in things that I can put into a portfolio that I can build and hold for the long term. I'm talking years. So you kind of have to figure out which one you're most interested in. Next is, what kind of conviction do you have in the asset that you're looking at here? And most importantly, where does that conviction come from? Does someone like me, who made a TikTok and acted all excited about it, is that the thing that's informing all of your conviction? Or have you arrived there because you've read a lot about it, it makes sense to you, you understand what the value is, you understand why it could grow, and you can see, marks of its demand increasing? All that sort of stuff can inform conviction. Specifically with regards to crypto, cycle timing is one of those things that you should at least be considering. Now, there's a lot of speculation that the 4-year cycle might be broken or in the process of breaking. I couldn't tell you whether or not that's true. I can definitely say that I've seen some evidence to support that claim, but it's a little bit too early to tell. So with what that essentially means is, where in the cycle are we? Are we like everyone's excited, everyone's talking exclusively about this big bull run, or are people kind of confused? Are people concerned that everything's going to crash and fall off of a cliff? Can you kind of try to figure out, where does everyone generally think we are? How has the asset you're looking at behaved? Is it kind of doing what you would expect? Is it not? Is it too early to tell? Has it been around for a long time and you have a lot of data that you can look at? Or is it brand new, just come onto the scene, and you're kind of looking at this more of, early stage venture style investing? You will hear the phrase macroeconomic environment or some form of macroeconomics a lot as you're looking at investing. And basically what that's doing is talking about the impact that events all around the world and in the country that you live in can impact the market that you're looking at investing in. All of this stuff is connected. You can't just look at these things in a vacuum, okay? You have to consider how the entire ecosystem impacts the things that you're looking at investing, because I hate to break it to you, it's all connected. Liquidity and accessibility is more applicable when we're talking about cryptocurrency investments, just because liquidity is a real concern. That's essentially a measure of the amount of money actually available to support buying and selling of the asset you're looking at. So is there any? And if not, why not? Is it just too early, or is it because it's seriously just no interest? Definitely consider tax and regulatory implications, okay? Mostly taxes here. Make sure you understand that when you start to invest, you're opening yourself up to a new realm of tax obligations. You, unfortunately, owe taxes when you make money investing. There are ways that you can navigate this and mitigate it. I am not a tax expert. I do know some. So if you're interested in this kind of thing, let me know and we'll invite some more tax specialists on the show. Then, of course, it is worth considering portfolio diversification. You might have some sort of a plan of what you would like your ideal portfolio to look like. You don't want too much exposure into too many things that are all in the same category. Maybe you want to spread it out a little bit more. Maybe you want something to represent each of the major niches or, sectors of the market, whatever that is. However you would like your portfolio to be designed, consider that when you look at adding new assets, where does it fit into that plan? Bringing up the rear, we've got a very important thing to consider, especially when we're talking about crypto. Are we reacting to sentiment or signal? And the difference there is that sentiment kind of indicates that there's a broader push to become interested in this. The market is more ready to receive a product like this. Maybe there's real demand for it. It's turning some actual revenue, versus signal, where it's just hyped up. And there's a lot of people that are excited about it just because of the potential to make money on an investment like this. But in reality, there's not a lot propping it up other than hype fueled on social media, for example. It can be very hard to cut through the noise, especially with crypto, because it's a new industry. It is very complicated. There's a lot to consider. There's a lot of new technology that people are just starting to figure out, and you really need to be very, very critical of the information that you intake, especially from content creators on social media, because the overwhelming majority of them do not fully understand what it is they're talking about. They are interested exclusively in the narrative of getting rich quick, and they know that the potential to do that exists with crypto, and they can capitalize on that excitement by selling you a pipe dream. Once you've made it all the way through here, I like to tally up my score and kind of come up with one of these categories. You could break this up further. This is just the way that I decided to do it, but there's really no wrong answer here. The number that you arrive at and the information that you uncover while you're answering all those questions, which will involve doing some research, will tell you pretty much all you need to know. And then, of course, please, please, please remember that all of these different data points, they contribute to a bigger picture. None of them individually can tell you for sure one way or the other. Nothing is guaranteed with any of this. Okay? Unfortunately, the financial situation that lots of us find ourselves in pretty much requires us to take a more elevated risk than people in generations past have ever had to expose themselves to, just to kind of break even or have the chance to get ahead. And along with that heightened risk profile that we're all kind of being shoehorned into, we do have to recognize that there is a downside. Not all of these investments are going to work out. Okay, not everything is a guarantee, no matter what some people tell you. Just because some people think that we're heading towards widespread mass adoption for all of crypto does not mean that every single altcoin, of which there are literally millions, are going to succeed. In fact, the overwhelming majority of them will never recover. And that has to be on your mind while you're looking at these things and while you're analyzing the potential for you to invest in stuff, especially if you are operating at a more conservative risk profile, meaning you're not super comfortable taking a ton of risk. So just keep that in mind, okay? No one's got a crystal ball. Nobody knows where the markets are going. You have to answer some of these things for yourself. And people like me are more than happy to help you put workbooks together and figure out which questions are the most important to ask. But that is the extent of what people like me can do. We can't tell you what to buy. We do not know your personal financial situation. Only you can answer those kinds of questions for yourself.